Tonight on Vincenzo's Gold Crypto Investing, we go over XDC, a scintillating, exciting, fascinating case on Quant. And then we go over the extensive evidence and mystery that goes into the bear market and where we go next and whether this is a bull market. Good early morning on this Saturday in mid-August on this very late summer. Mostly sunny skies with high overcast streaming in on this hazy, hot, and humid day on this 74-degree morning in the greater Roseville metropolitan area in the great state of Michigan, right? You like, subscribe, and share on our way to 600 subscribers for a one-of-a-kind, company-made, probability-based trading alert and technical analysis and the rest of it, right? And we're going to go over some Quant. We're going to start going over, we're going to bring into the pot section, seeing as we got some listeners. Josh, my man, I'm making you your Quant video right now, and we've had that extensive explosion in price with Quant. We thought that was a high-end top potential there when we were going to $110, and it did, and then it crashed. But now you can see we've had a huge explosion in Quant. We're way up there now. Sky's the limit for Quant. But you can see we're going to put these. No, we got to get rid of these. We need the price labels. Oh, I got a lot of this shit down here. Sorry, Josh. We got to clean this up a little bit. I haven't talked about Quant in a minute. Been extremely busy. So we got a price label up here. You can see we peaked out at $201. Congratulations to anybody that took this trade. And no, I would not be buying up there. If you want to play the moving averages now, it's going to come retest this $131. Buy that if you want. But you had to pre-buy this before the pump. And no, I can't tell you when to buy everything. I told you it was going to pump here when it came down there after it touched our $18 target or $21 target that we had. But I didn't think it was going to come way up here. I thought top end potential was up somewhere by the jabroni's head again, like $100 to maybe a little bit higher, maybe $120. I never thought we were going to go to $200. Nobody did. The people that did were just saying it was going to go up the whole time the coin's been out. And they're going to be shocked again when this thing comes down, because this thing will come back down. And eventually, if you try to diagnose, snip out, and detect this, you can see we're in a huge rising channel or a rising wedge.
Well, and you still don't get it, even though we're at
this is a massive one.
You still don't get it, do you?
You can see that one, a rising wedge.
The
beautiful rising wedge.
And I told you, I am not a financial advisor. No, nor do I play one on this own radio show. This is strictly
just to go over this, and the target of this is the bottom of the wedge. If it breaks down out of it, you see
I'm going to have to bring a lawsuit.
Upper resistance, 2 lower support, 2 lower upper resistance, 3 upper resistance. So we got 3 upper resistance hits and 1 long straddle at the bottom, and then 2. So we got 2 hits on the bottom of lower support. Let's go over that again. Upper resistance 1, lower support 1. Upper resistance 2, lower support 2, upper resistance 3. Overall, super confirms the pattern, right? Because you want to see a couple of strikes on both. Now we got 3 hits on the top and 2 hits on the bottom. Confirms the rising wedge. See that? And a rising wedge simply means it's wider at the bottom and narrower and smaller and converging. It converges on itself at the end of the pattern. So if we zoom on in here, you can see we can bounce around in here a little bit longer like that if you want with our industry exclusive wavy line price predicting tool, right? You could do that a little bit longer. But you have this huge volume pump right here. So we were bullish up to here, right? Because we have rising price. Let's go over this. We haven't done this in a while. Rising price, rising volume, bullish. Up and sideways consolidation. Do you see that? Bearish. Crashing volume, bearish. So we have pumping price up to here, up to right here. Come on. We have pumping price, pumping volume, bullish. Then we have crashing price after pump, can be bullish or bearish, but we have an up and sideways consolidation, bearish. Often a sign the buyers and a rounding top is formed, as we're noticing now, as the buyers or the bulls are being exhausted and the sellers or the bears are taking over the market, and the price is going to come down. And the targeted move out of this fall is the bottom of the wedge. So our target is $42.21. That's not to say it's going to crash down there. Actually, it's a little bit higher. It's about there, about $72. That's not to say it's going to crash down there. That's just to say that's the target. So you're going to start to fight the moving averages on the way down. Say you dip down, you come to the 50-day, then you bounce back up. Then you come back down to the 100-day, then you come back up. Then you fall below the 200-day. There's not enough data yet. But that's your target, and that's where you're going to end up going, because you have that pumping price, pumping volume, initially bullish up to here, bullish up to there. And then after that, this consolidation is bearish because you get an up and sideways consolidation with a crashing volume that's very bearish. And you're starting to see that rounding top in the daily time frame. See that? You're getting that rounding top. And then if we zoom on in and isolate it on this, oh, that's right, Vincenzo said zoom on in and isolate this. You can see the rounding top starting to form, but you can still place support and resistances. Put a little, this is where these are good. We'll put a little price label in. You can see upper resistance is at $204 and lower support is at $155, right? But as soon as this breaks this, you're going to trade right down there to that $72 level, because that's the bottom of the wedge. So that's going on in Quant. And then XDC, probably take them same principles, because that's a trading rule and a company philosophy. Same thing here. This was all bullish. Let's get all this noise out and malarkey. So this is the same here. You see that big volume spike right here? See that? It's all bullish. This is all bullish into here. But then since then, you get this up and sideways consolidation with no volume, a crashing volume to needing a monocle to see it. That's very bearish, often a sign. This is going on a shirt. Pumping price, pumping volume, bullish. Crashing volume and an up and sideways consolidation after the pump, very bearish, often a sign the buyers are being exhausted, or the bulls, and the sellers or the bears are taking over the market, and the price is going to come down. And that's what you're seeing here. And usually you see these in rising wedges, and just like Quant, this is in a rising wedge, and this has all been bearish since this pump, since right here. Since the pump, and you've had all of that. See that? Just like the other coin we just looked at, just like Quant. That, see that? Do you guys see that? That's all bearish, because that's an up and sideways consolidation after that huge, come on, with our industry exclusive drawing tool, after this huge pump right here, right? After that huge, after the huge pump right there, bullish with pumping volume, bullish. That was bullish. Then as we crashed, we had crashing volume that was also bullish, right? Because crashing volume down and sideways and down consolidation, bullish. But then you see the overall volume continued to crash, never even sniffed that or down here or any of this. So once we had this pump, it became bearish, all that, because now we have from here, crashing volume with pumping price, right? Look at that. So we knew this could still sneak up, but this is going to be one of these coiled where this is crashing volume, up and sideways consolidation. That's very bearish. That's just telling you the buyers are being exhausted and this price is going to roll over. That's why it's a slow sneaking up and sideways consolidation like this, not any real pumps like that, right? You just get this little dying out where everything starts constricting and the higher highs get lower and the lower lows get lower, right? You get closer to the high, and eventually this thing's going to run out of steam. And with our industry exclusive wavy line tool, price predictor, you could still trade up in this, but as soon as you dip, you're gonna have a huge crash. And just like the other one, the target is the bottom of the wedge, and the bottom of the wedge isn't quite that low. The bottom of the wedge is about 11 cents in XTC to come down from here after this phenomenal pump. And then I think this is eventually going to bring you back. There's the shit house. Actually, shit house is like in there. Get rid of that. I don't know what we're doing. We're just making all kinds of nonsense on here. We called that beautiful pump starting from there, so we're going to leave that on, and that was the spot to buy. And we told everyone to buy. We had major buy alerts down there at 0.062 cents. But this thing's going to come back down into this zone to get my shit together box, the last line of defense, which is way down here where we had lots of good fights. We're going to be coming back down here, and we know that's orange, so we're going to make it orange, right? See that? We're going to end up be coming back down there. But there's your target right now on XTC, 11 cents. As we zoom in, we'll show you kind of how this can work. You got your 3 stops down with the moving averages, so you start to trade down, you straddle this, and then you pop and get supported by the 100, then you fall, or the 50, then you fall to the 100, then you could pop back up and get rejected by the 50, and then come back down to the 200, and then back down. You step your way down, or you just crash, but I think in this case, you're going to step your way down, and then you're going to use the moving averages to guide you down, right? Because if we draw these out into the future, the 50-day moving averages will be there, the 100-day will be there, and the 200-day will be there. And you can see how you can get supported and resisted on that on the way down, right? So that's going to use you to guide you on your way down to your first target, which is, God, I always forget this fucking stupid thing's on. The first target, which is the bottom of the wedge, industry exclusive price label. I don't want that. We need to do the better one. Start siphoning this shit ones off. First target, ultimate target, short term, on an up and down fashion. Like this, a nice bright color. Is 0.07. Oh, not down there. Is the bottom of the wedge, which is 0.11426. That's your short-term target in XTC. Yes, you can still pump a little higher as shown with our industry-exclusive wavy line price predicting tool right there. You can still squeeze up in this rising wedge, and this is the rising wedge we're talking about in green. You guys see that? Look at that beautiful rising wedge. Get that dot out of there. So that's what to look forward to. Like, subscribe, and share to Vincenzo's Gold Crypto Investing. Peace and love. Peace and love.